Which stock is the better buy, FuboTV or Skillz? I'm going to answer that question in this video, comparing the two across several important metrics. So let's get right into it. First, let's look at the price declines in 2022. FuboTV stock was down 89% and Skillz was down 93%. Before you start thinking that, wow, this is an amazing opportunity to buy the dip, I will say I think the price declines in 2022 were justified for these two businesses. These are highly speculative investments with highly questionable business models, uncertain if they can sustain for the long term. So these price declines, in my opinion, were justified. Let's look at revenue growth for the two and compare them. And FuboTV has delivered more explosive revenue growth than Skillz. Skillz has retreated in recent quarters as it has suffered from reopening economies. It's losing a lot of customers. It's started to decrease some of its sales and marketing investment, and that's causing a big fall in revenue and customer growth. Meanwhile, Fubo TV is still growing the top line and still adding subscribers, so it's delivering better growth than Skillz at this moment, and I expect it to continue because Skillz really needs to pull back on that sales and marketing investment. It proved to be so ineffective in 2022 that management really needs to refocus that strategy and refocus the customer acquisition strategy in 2023. And so revenue growth is likely to be pressured for them. So Fubo TV has the advantage in terms of revenue growth. Next, let's look at net income quarterly going back to before July of 2020. And both companies are losing a lot of money on the bottom line. Skillz lost 78.5 million in its most recent quarter. Fubo TV lost 152.6 million in its recent quarter. Let's compare that with their sales. So Skillz earned revenue of 60 million and it lost 78 million. So it lost more money on the bottom line than it brought in revenue. That's not sustainable. That's really not sustainable. That's really excessive losses on the bottom line. Fubo TV meanwhile lost 152 million on the bottom line and it generated 224 million in revenue. So less than 100% of revenue it lost on the bottom line. So while it's also really bad to lose this much money on the bottom line with only 200 million, at least the losses were less than 100% of revenue. Like I mentioned earlier, these are highly speculative businesses with highly skeptical business models. That's why I think the price declines are justified for these two companies. Next, let's look at their cash from operations and a similar story. They're losing a lot of money here. Fubo TV lost 344 million in cash from operations in the trailing 12 months, while Skillz lost 243 million. They're burning through a lot of cash. This is not sustainable. They really need to change their business models. They need to, for Skillz, they need to stop significantly reduce that sales and marketing spending because that's what's primarily causing them to lose so much money on the bottom line. And for Fubo TV, they need to raise their prices. I know they want to compete with Hulu and YouTube Live TV to attract customers, so they want to price their product at that low point, but they really can't afford to. It's costing them way too much on the bottom line. They need to raise their prices by $10 to $20 per month. And yes, unfortunately, that's going to cause them to lose some subscribers. It's going to cause them to have slower revenue growth, but at least they'll be sustainable on the bottom line, and investors can be able to tell how much customers are going to stick around to Fubo TV when they're pricing at a more sustainable level. As it is now, this is not going to suffice. They're going to need to sell more stock or borrow more money in an environment where the cost of capital is soaring, so it's not a good time to be needing to raise capital. All right, finally, let's look at the valuation. Both of these stocks are significantly down as we saw in the beginning of the video. SKLZ is trading at a price to sales ratio of 0.786. FuboTV trading at less than half that valuation of 0.356. The reason for this, I believe, is that SKLZ, if it can get it right, its business model can potentially deliver higher profit margins in the future because it outsources the game development. It has high gross profit margins. There is a chance that if it figures it out, it can be a very lucrative business. Fubo TV, meanwhile, doesn't have that kind of prospects in the future because it aggregates content from other media providers and then sells it to its customers. It can't really earn a big margin there. In fact, that's what's killing them in terms of costs on the bottom line. It's that it has to pay other content providers to get to license their content. Management has said that's what they're going to do. They're a media aggregator, so the potential for higher margins in the future is not so high. Still, I don't think that SKLZ has earned a more than double premium for the valuation, especially considering that SKLZ business prospects, its business model is more in question in my opinion. So if you had to buy one of these stocks, which I would not recommend buying either of these, but if you were adamant and you really wanted one of these high risk, high reward type stocks, then I would go with Fubo TV. Fubo TV is the better stock to buy between these two. But remember, these are both very, very risky and speculative stocks. All right, thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.